They say you can't time the bottom, but this trade proves them wrong. Our Nvidia options trade just expired with over 200% profit, all because we caught the bottom on Nvidia stock. So if you think timing the bottom is impossible, think again and watch this video, because this is yet another real-time example proving how anyone can do this too, not just wealthy investors who once again got even richer by being in this trade too. And so, if you've been following our channel, you'll remember that it was on this day, April 7th, right at the bottom, at the low, when we detected unusual options activity and started our trade on Nvidia. At the time, the stock was trading under $100 per share. That same day, we posted this video analysis on our channel, which was about 2 months ago, showing why we were bullish and buying the dip, based on a $47.5 million options trade we had analyzed. And clearly, that analysis was right, because Nvidia stock is now much higher, trading at $143 per share. And in hindsight, that analysis was not only correct, it was also incredibly precise, because we now know that April 7th, the day of our analysis, marked the 52-week low, effectively the stock's bottom. On that day, Nvidia stock was crashing lower. Many people were panicking and selling out of fear. But we followed the data, not our emotions. That's what allowed us to stay calm, trade with confidence, and make better, smarter decisions, just like the smart money. And so, if you want to learn more about our strategy of tracking and analyzing smart money and how we identified this unusual trade to catch the stock's bottom, we'll link this video at the top here. Be sure to subscribe and hit the bell icon so you get notified when we spot the next unusual trade. Now, with that said, even if you're subscribed to our channel, you might still miss out on some of these profitable trades. That's because we don't always have enough time to make a full video for the channel. So that's why we also send out email alerts. Email is the fastest and most reliable way to share these unusual trades, even when there's no time for a video. So if you want access to more of these opportunities, just sign up for our free newsletter on our website. We'll put a link up here. It's simple, quick, takes less than a minute to sign up, and best of all, it's completely free. No credit card, no paywall, just raw data-driven trade alerts based on unusual options activity, emailed straight to your inbox. You'll get direct access to the trades of wealthy investors and potential insiders, so you can see what smart money is doing before the stock makes a big move. Now, you might be wondering, are these alerts based on options trades still useful if I'm only trading stocks? The short answer is yes, but keep in mind, the potential profit can vary significantly. As you can see here on the chart, if we had simply bought the stock on the day of our analysis, right at the low, we could have gained about 65% profit. But because we traded options, we had the leverage to gain much more. How much more? Well, let's take a look at our original trade, the same options that a wealthy investor was trading as well. It was these June 20 options at the 85 strike calls. At the time we entered the trade, each contract was priced at $1,900. Because this shows option prices, we either move the decimal 2 places to the right or multiply by 100, since each option contract controls 100 shares of stock. Now, as you can see here on the profit-loss graph, which already factors in the cost of the trade, our profit is about $4,003 per contract or trade. And so, to calculate the profit percentage, we need to divide this profit of $4,003 by the initial cost of $1,900, and then multiply by 100 to express it as a percentage, and that gives us a total of 210% profit. In other words, we made more than double our original investment on this trade. And so this is another example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. Because understanding where smart money flows gives us deep insights into potential stock moves in the market. The rich often have better access to information, sometimes even leaked insider information, that help them make smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, if you want to get deeper access to more of these smart insights from the rich, then go to our website. We'll put a link up here. Keep in mind that our members also get earlier access to trades like this before anyone else, even before we share it with the public. So if you're tired of being late and want more time to act on these opportunities, just head over to our website where you can see in real time when and which stocks wealthy investors are trading on Wall Street, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, not every unusual trade will be a winner, but by using strategies that offer a favorable risk to reward setup, maximizing potential gains while minimizing losses, then we can stay consistently profitable over the long run. And so, as a real time example, let's go over how we updated this trade into a risk free option strategy with no possible loss by following the data and tracking the trades of wealthy investors. Because that's exactly how we got into this winning trade in the first place, back on April 7th, when Nvidia stock was trading below $100 per share. As you can see here in the historical data from that day, we detected something unusual in the June 20 options, so we dug deeper, analyzing multiple data sets to uncover what was really going on. That's when we discovered significant activity in the 85 strike call options. At the time, those options were priced around $1,900 each, as we calculated earlier. But here's the key detail. One wealthy investor bought 25,000 of these contracts on that day, causing a major spike in volume. And after carefully analyzing and confirming the data, we took the same trade. And so, fast forward today, those June 20 options at the 85 strike calls have now officially expired. And take a look at their final value. They're now worth between the bid price of $5,800 to the ask price of $5,900 per contract. Remember, these same options were only priced around $1,900 each when we entered this trade. That's why our trade turned out to be so profitable. That's also why our position still shows up here, marked as POS, which stands for our position with the green color indicating an open buy position, because we did not close all of our contracts. For some of our contracts, we're holding through expiration to get assigned 100 shares of Nvidia stock at $85 per share, which is exactly what each call option contract gives us the right to do. And notice here at the open interest, there are still over 9,000 contracts open, suggesting that this wealthy investor may also be getting assigned shares as part of a longer-term strategy. Now, for the rest of our contracts that are not getting assigned, we close them out by selling these options to lock in profits and then use a portion of those gains to open a new position, extending the time on this trade to a later expiration date, the September 19 options. This is part of an options rolling strategy that we often use to manage risk. We also rolled to a higher strike price, to the 125 strike calls, which keeps upside potential intact in this new position. And notice there's over 51,000 open contracts at this strike, showing significant interest in these options. In fact, 40,000 of these contracts belong to a single wealthy investor we've been tracking. If you're already one of our members, you likely saw the alert we emailed when this unusual options activity first appeared, giving you the chance to act early. And so that's why we bought these 125 strike calls for less than what we earned from selling our previous position. That means this new position is funded entirely by profits from our earlier trade. This lets us re-enter the trade at a net credit, not a debit, requiring no additional capital and effectively turning it into a risk-free setup. And so, when we analyze our trade now, You can see here on the risk profile graph, since this previous buy position matches the same June 20 options at the 85 strike calls as the sell position, the two offset each other, effectively canceling out these options and closing the position. So now we are just left with our open position in the 125 strike calls expiring September 19th. And so on the graph, the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading around here at approximately $143 per share. Now take a look at this. Even if Nvidia stock goes down or crashes, our trade would not result in any negative loss. That's because we've already locked in more profits than the cost of our new position, making this a risk-free trade moving forward. And so, this is how we updated our trade to manage risk by minimizing losses. In this case, we eliminated the possibility of any loss while still giving us the chance to gain more profits if the stock continues to move higher. But keep in mind, this no-loss strategy was only possible because we followed that wealthy investor early, back on this day, April 7th, when Nvidia stock bottomed out at its 52-week low. If you missed our previous analysis on Nvidia, we'll link that video here so you can see exactly how we bought the dip and made 210% profit. If you want to learn more strategies to increase your profits, visit our website. We'll link it here as well. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful weekend.